Hi, Suzy Rhoades here with PassMasters. Welcome to this week's Questions of the Week. This week's video is for those of you taking this series 66 exam. We're going to cover questions related to Section 2 of the content outline. Let's check out NASAA's content outline. Section 2 is investment vehicle characteristics. It is 20% of the test. The test has 100 questions. Passing is 73% or greater. There are 20 questions related to this section. So this section is a lot of product information and how to evaluate different types of products. Let's check out the Section 2 exam from within PassMasters Series 66 online test prep course. Breakpoint sales are a great way to make a good commission, purchases that occur just over a breakpoint, a violation of FINRA rules, or perfectly legal. Breakpoint sales are a violation of FINRA rules. You choose what you believe is a correct answer, click check answer. You know you got it right if you get that green check mark. So when you have pooled investments, within the prospectus, it will describe if there is breakpoints. It's usually once your account balance gets to a certain amount, the sales charge goes down. So let's say it's $20,000 breakpoint. The client's going to invest $19,000 and you're like, yes, because you make a higher percentage commission if that's the case. If they go over the breakpoint, then it's less. So you have to explain to them that they're near a breakpoint. If you don't, it's a violation of FINRA rules. So for all of our questions, you can click Show Explanation. You can read the rationale and you can listen.
Breakpoint sales are.
To appeal to the auditory learners, all of our questions have audio explanations. Your client invests $10,000 into a Class B mutual fund that has a 5% contingent deferred sales charge. How much money will go into the fund to buy shares? All of it. A contingent deferred sales charge is a back-end load. So all $10,000 is going to go in to buy those shares. Other soft agricultural commodities include all except. So which one is not other soft agricultural commodities? Coffee, frozen concentrated orange juice, cocoa, or milk? The answer here is milk. Milk is a dairy commodity. The other soft agricultural commodities would be coffee, frozen concentrated orange juice, cocoa, and sugar. A bond's yield to call is less than its nominal yield. I gotta make my little teeter-totter. Market price is higher than, the current yield is less than the nominal yield. The bond is trading at a premium for more than par. Interest rates must have gone down relative to this bond's nominal yield or coupon rate. Which is a security, commodity, futures contract, forward contract, or option contract? Option contracts are securities. Using a dividend model in determining whether or not to buy securities would work best with which type of investment? Foreign, growth stock, technology, or blue chips? Using a dividend model. So there's nothing in the question that makes me think foreign has anything to do with it. Growth stocks pay low to no dividends, so that wouldn't be helpful. Technology, blue chips. Blue chips are stocks that have a history of paying dividends. So that would be the one that using a dividend model would be best of those four. Who believes that small investors always buy and sell at the wrong times? Advanced decline theorists, odd lot theorists, short interest theorists, or fundamental analysts? It is odd lot theorists that believe that small investors always buy and sell at the wrong time. It is true that oftentimes small investors, when the market crashes, they want to sell, and when the market goes up, they want to buy, which is backwards. So, odd lot theorists. Open-end investment companies are required to value their fund shares how often? Once a week, twice a day, or once a day at the close of the New York Stock Exchange. Always pick the most correct answer. It is once a day at the close of the New York Stock Exchange. Some funds do it at noon and again at the close of the New York Stock Exchange, but they must do it at the close of the New York Stock Exchange. On a variable annuity, the rate of return depends upon current interest rates, the Wilshire 5000, the performance of the various subaccounts selected by the client, or the S&P 500. On a variable annuity, the rate of return depends upon the performance of the various subaccounts selected by the client. Which of the following investments is most suitable for a client in a high tax bracket? Municipal bonds? Yes, municipal bonds are best for an investor that's in a high tax bracket, but let's check the others. Options, stocks, mutual funds, no. Whenever you see high tax bracket, you always choose municipal bond. Another way of saying the same thing is that you don't choose municipal bond unless you see high tax bracket. Interest on a municipal bond is tax-free federally, so it's a great tax break for wealthy clients. Which of the following is incorrect regarding life insurance? In order to sell variable life, the producer must have a Series 6 or 7 and a life insurance license. True. The premiums are paid in after-tax dollars. True. The death benefit is tax-free to the beneficiary. True. The face amount is not included in the insured's taxable estate. That is incorrect. So when the insured owns life insurance on their own life, the face amount is included in their estate for estate tax purposes. It doesn't mean that the estate is taxable. It's only whatever is over the current year's estate tax exclusion amount that is taxable. But when the insured is the owner, the face amount is included in the valuation of the decedent's estate. The discounted cash flow method is used in an attempt to predict how high interest rates will go in the near future, rate the volatility of a bond's market price, determine the duration of a bond, or determine the fair price of a bond. The discounted cash flow method. So think about a bond. A bond represents two things. It represents semi-annual interest, so every 6 months you get an interest payment, and repayment of principal at maturity. So the discounted cash flow method is used in an attempt to determine the fair price of a bond. Which statement is incorrect regarding an S&P rating? The lower the rating, the higher the yield. That's true for any kind of rating. It will be identical to the Moody's rating. No. It will consist of uppercase letters and may have a plus or minus sign. S&P, they're capital, yes. The higher the rating, the lower the risk. True. So Moody's has uppercase and lowercase letters, so they are not identical. Different. They look different, S&P and Moody's ratings. Sam purchased 10,000 shares of an open-end mutual fund on December 1st. On December 17th, the fund made a capital gain distribution of $2.50 a share. Of the following, which is correct regarding this distribution? It will be tax-free to Sam. It will be taxable at long-term capital gains rates to Sam. It will be taxable as ordinary income to Sam. If Sam chooses to reinvest the capital gains, he will defer taxes. Okay, so even if he did reinvest, he's still going to owe taxes. The question is, at what rate? He only owned the shares for a very short period of time. But that's irrelevant. Capital gain distributions result from the holding period of the mutual funds portfolio being a year and a day or longer. So they take the securities that they sold and had a gain, net them against the securities that they sold and had a loss, and then they distribute it most one time a year, usually in December, a capital gain distribution to the shareholder. And that's the $250 in this question that Sam received. Capital gain distributions on mutual funds are always taxable at long-term capital gains rates. All of the following are fees associated with variable annuities, except, reword it without the except, which is not a fee associated with variable annuities. Administrative expenses, mortality expenses, premium taxes, or probate fees. Which one of these things does not belong here? I know, I'm a terrible singer. But that Sesame Street song is so useful. Probate fees have nothing to do with variable annuities. Exchange-traded notes are similar to index funds, are redeemable securities, are marginable at settlement, or trade without commissions. Exchange-traded notes are marginable at settlement. They trade in the secondary market, so they do have commissions. An investor in a 25% tax bracket is considering buying a 6% municipal bond. What would a corporate bond have to yield to be equivalent? So first off, 6% municipal bond interest income would be tax-free. So the taxable equivalent yield has to be what? More or less than 6%. It has to be more than 6%. So what you're going to do, the formula for this question is the municipal bond yield of 6% divided by how much of the taxable yield will the investor get to keep? 100% minus the tax bracket, 75%. So use your basic non-programmable calculator. 0.06 divided by 0.75, 0.08. So 8% would be the taxable equivalent yield. So let's just pretend that the investor bought a corporate bond yielding 8%. That would be $80 in interest income. 25% of that would be owed in taxes, which is $20. $80 minus $20 is $60. Is that equal to a municipal bond that pays 6%? Yes, always double check your math, because sometimes you punch in the wrong numbers into your non-programmable calculator and it lies to you. So always use your brain on top of the math. So 8% would be the corporate bond equivalent yield. Your client invested $100,000 in a mutual fund on December 1st. They received a $20,000 long-term capital gain distribution on December 22nd. Which of the following is true regarding this distribution? The $20,000 distribution reduces the client's cost basis by $20,000? No. The entire $20,000 is taxable to the client at long-term capital gains rates. I like that. The other choice is ordinary income rates, no, or not taxable, no. So capital gain distributions are taxable at long-term capital gains rates to the investor. Which is false about Viatical and life settlements? They are regulated under federal law. The longer the insured lives, the better the return for the investor. That's false. There is no active secondary market for these policies. They are regulated under state law. So which is false? The longer the insured lives, the better the return for the investor. No. When you buy a life or viatical settlement, the sooner they die, the better for the investor, which is like the backwards, not at all what life insurance was intended for, in my personal opinion. Which of the following situations would the interest paid on a municipal bond be tax-free at the state level? So municipal bond interest income is always tax-free federally. When is it tax-free at the state level? When the bond is issued by the state that the investor lives in. Yes. So the other choices, I'm not even going to read those. Those are all false. So it's double exempt. It'll say in the test question that Suzy lives in Arizona and buys an Arizona municipal bond. Where is the interest taxable? Nowhere. If Suzy buys a bond from California but lives in Arizona, then the interest is taxable on Suzy's Arizona return. Always tax-free federally. Interest income from municipal bonds, always tax-free federally. They tax themselves, but not each other when you're comparing U.S. government securities and municipal securities. That's the little saying that helps you with that. They tax themselves, but not each other. U.S. government securities interest is taxable federally, tax-free at the state level. Municipal bond interest income tax-free, federally taxable at the state level, unless it says in the question that the bond is from the same state that the investor lives in. All right, great job. Thank you so much for working through that Series 66 Section 2 exam. I hope you learned something. If you did, be sure to give this video a thumbs up, subscribe to our channel, and turn those notifications on. If you have any questions at all about this exam or about 66 in general, ask me in the comments below. If you'd like to check out PassMasters course offerings or to enroll in any of our programs, there's a link found in this video's description. Keep up the good work. I hope to have you as a student soon. Happy studies. You got this.